Leverage ETFs versus the ARK ETFs. These guys have been a powerhouse this year, especially since the March lows. The question is, are ARK ETFs the new leverage ETFs and the ultimate tool to amplify gains? Let's talk. What's happening, everyone? Welcome to Think Finance. Happy holidays. Hope you are having a fantastic time. My name is Raj, and on this channel, I talk about personal finance, investment ideas, money management tips, and everything money. Cathie Wood led ARK Invest offers ETFs that focus on disruptive and innovative technologies and companies. I've been exploring these for some time now and trying to answer a few questions. Should ARK ETFs be in my portfolio, and do they have the potential to offer explosive returns similar to leverage ETFs, but with less risk? So, in this video, I'm going to compare ARK Invest to leverage ETFs from a performance perspective. Of course, this is not an apples to apples comparison given what they stand for, and return is not everything. As an investor, I also want to keep my eye on the long-term price, meaning you invest today and hope to get exponential return sometime in the future. I will share my thoughts on ARK Invest as a company, their investment strategy, and changes I'm making to my portfolio. Spoiler alert, yes, I am adding some ARK ETFs. Let's start by looking at raw numbers. Here's a quick comparison on the returns. Since the March lows, leverage ETFs have been on a tear with triple-digit returns. Tech and semis ETFs have just been parabolic. The fact that ARK ETFs are not leveraged, these have performed pretty well as well. Let's spin this a little bit and look at numbers starting the beginning of the year. And I'll focus only on tech ETFs and try and draw some observations. Observation 1, ARK ETFs have not just outperformed leverage ETFs, but almost tripled in terms of return. Second, ARK ETFs was able to manage the drop better compared to leverage ETFs during the March meltdown. Most leverage ETFs dropped almost twice compared to ARK. Since ARK ETFs are actively managed, Cathie and team most likely made adjustments to better manage the drop and volatility. Number 3, in a raging bull market, leverage ETFs will outperform ARK, but ARK won't be far behind. Yeah, I know this is a short-term comparison and return should be measured over the long term. I wanted to compare these for 2020 since this is one of those rare years where most stocks made 52-week highs and lows all in the same year. By the way, in the last 5 years, TQQQ has returned approximately 60% annually, compared to 50% for ARKK. Of course, ARK ETFs are new kids on the block, but still pretty impressive. So they perform pretty close to leverage ETFs, and since they are actively managed, they offer better risk management. Does this mean you need to make space for ARK in your portfolio? Actually, there are bigger reasons to invest in ARK. Let's take a closer look at ARK as a company, the ETFs, and their holdings.
Traditional investment firms are having trouble, we believe, understanding the magnitude of the innovations that are taking place today. Investment firms that are not set up appropriately to analyze and research and invest in disruptive innovation are going to be depriving investors of some of the biggest opportunities of our lifetime.
If you didn't know, ARK Invest is a private investment management firm founded in 2014 by Cathie Wood. The company employs a little over 30 employees and have over $10 billion of asset under management. ARK is not a traditional investment firm. You spend 5 minutes on ARK website and another 5 minutes listening to Cathie, and you will realize the company is onto something. The philosophy is innovation is key to growth. ARK invests in disruptive companies that has the potential to change a whole industry and make human lives better. Basically, with ARK, you are investing in the future. By the way, I'm not an ARK spokesperson, but the perspective is so fresh when you compare with traditional investment firms. They have identified 5 innovation platforms that they believe will be transformational. And as a retail investor, you and I can invest in ARK ETFs that are focused around these platforms.
ARK is a global investment firm, and we are focused only on disruptive innovation. That's our sole focus. We believe that investors are missing out on some amazing opportunities out there just because of how the traditional financial world is set up. It's very siloed, specialized in a world where technology is permeating every sector and innovation platforms are converging. DNA sequencing, robotics, energy storage, artificial intelligence, blockchain technology. These are the 5 major innovation platforms today that are evolving at the same time. We have never seen this amount of innovation evolving at the same time in history.
In 2020, ARK ETFs have been on fire, mostly because the companies that ARK invests in are in the business of solving problems that we faced in 2020. Think remote working and cloud, cybersecurity, energy storage, autonomous, fintech, you name it. You won't find FANG stocks in ARK ETFs. Their goal is to find the next set of FANG companies that are right now in their infancy, but has the potential to grow exponentially in the next 5 years.
Well, we're not saying they'll be bad stocks at all. In fact, they've been very good stocks. And they were a part of our portfolios in the early days. But as they were scaling into the $1 trillion category, we believed that our research would be focused better on the next set of FANGs.
You really have to believe in the innovation story to invest in ARK. If you believe in autonomous, AI, genomics, fintech, blockchain, Bitcoin, and other disruptive innovations, ARK Invest is a solid way to get invested. They are doing the hard work, the research, and are actively managing the ETFs. By the way, you can get access to all their research. They want you to see what they believe in and are hoping to find new ideas via collaboration. Do your own research. They want you to prove them wrong. So far, they have been right. There will be phases when these ETFs will do nothing, and maybe the reason is that the companies behind these ETFs are in investment mode and eventually take off exponentially. For example, the genomics ETFs ARKG returned a whopping 200+% so far in 2020. Here are the reasons why I believe you should invest in ARK. Number 1, the investment mindset. How many portfolio managers out there focus on innovation, the future, and exponential growth? Traditional investing means valuation, earning per share, revenue. You get the point. It is centered around value as opposed to exponential growth. To be honest, I don't think it is wrong, and it has worked all these years. ARK gives you an opportunity to invest in a different way of thinking, and if it works, could lead to major gains for your portfolio. Number 2, ARK Invest has been in business for a while now. Numbers speak for themselves. ARK ETFs are the best performing ETFs for a few years now, with 50% average annual return, and some also have 5-star Morningstar rating. The fact that we can compare performance to 3x leverage ETFs is a big deal. Number 3, and it is a big one, These ETFs are actively managed, meaning any position on the ETF is backed by research and its future potential. As long as the investment objectives are being met, the company will be on the ETF. Else, they're going to find another opportunity. This is different from an ETF that tracks an index like S&P 500, where the focus is just to match the performance of the underlying index instead of making investment decisions based on quantitative research. Number 4, 2020 proved that ARK is invested in the right areas. Moving forward, working remotely will be part of the work culture. Companies have realized the importance of cloud, cybersecurity, digital contracts, and just work from anywhere culture. And apparently it has reduced cost since you don't have to lease office space anymore and spend on other operational activities. We are just getting started, and companies that are innovating in work from anywhere culture make ARK ETFs. Number 5, allows you to further diversify your portfolio. If you compare the top 10 holdings in TQQQ and TECL versus some of the popular ARK ETFs, you get access to a lot of heavy hitters and popular growth names with little to no overlap. Okay, so talk is cheap. It's easy to talk about how great ARK is, but am I doing something about it? I'm allocating 20% of my portfolio into 3 ARK ETFs. Number 1, Innovation ETF. If you want a little bit of every innovation platform in ARK portfolio, ARKK is the ETF. They call this one their signature ETF. Number 2, Genomic ETF. ARKG targets companies focused on DNA sequencing, gene editing, CRISPR, therapeutics, and molecular diagnostics. That all made sense, right? Imagine a scenario where you can predict cancer at stage 1 and proactively curb it. It focuses on healthcare, pharmaceuticals, and everything that enhances human lives. According to Cathie, this space is the next Tesla in next 5 years.
Tesla's still in the running, but I would have to say the biggest upside surprises are going to come from the genomic space. And that's because the convergence of DNA sequencing, artificial intelligence, and gene therapies, importantly CRISPR gene editing, are going to cure disease.
Number 3, FinTech ETF. If you're not hearing about blockchain, Bitcoin, digital wallet, Square, PayPal, and FinTech companies like Robinhood and M1 Finance, you are definitely living under a rock. I think we are just getting started in this space. Imagine a world where your phone is your bank.
You can see one specific to FinTech, which is what this conference is mostly about. So you can see mobile value transfer devices, artificial intelligence in the cloud, and blockchain technology. So 2 of the big 5 are at work in the FinTech space. The digital companies that have spawned this movement, actually Amazon and Alibaba had to really start this digital wave off. And now you're seeing many other more pure play FinTech companies move into the game and turbocharge it.
Again, you need to believe in the space they're investing in before you commit your hard-earned money into it. So, coming back to the original question, are ARK ETFs the new leverage ETFs? Not really, but they get pretty close. I think a hybrid strategy where you invest in both can, number 1, further diversify your portfolio. Number 2, better spread the investment risks. And number 3, if all goes right, maybe offer you exponential growth. With that, here is how my portfolio will be allocated on M1 Finance starting 2021. I am working on a more detailed video on this, but here is a sneak peek. 50% will be in traditional dividend and growth stocks. These will stay with me forever, something I hope to gift my kid in the future. 30% in leverage ETFs and 20% in 3 ARK ETFs. That's all I have, guys. Do you invest in ARK? Would love to hear your feedback. Thanks for watching. Like, subscribe. Until next time, peace.